Hey guys, it's Matt Z from Optimus Futures, and today I'm going to talk about the concept of time and trading. Hey traders, today I'm going to talk about, like I said, the concept of time and trading, and to let you know that I think that time is one of the most undervalued indicators in trading and something that many traders don't look at. In fact, I actually come across this concept of how long a person is in a trade only from professional traders. So they've added the concept of time in their trading, and I want to introduce this concept to you as well, and I hope it helps you in your trading. So I'm going to illustrate here the concept of time through a chart that I have here of the micro NASDAQ. So we're going to add the rest of I'm going to add some charts here, and I'm going to add the dome as well. Okay, so here we go. So now we have some sort of setup that many day traders would use. Basically, you have here 3 time frames. So traders look at a short time frame like a 5-minute, but they also look at something a little bit longer like 15 and 30-minute. And I have also the dome here, trading. Let me expand on this a little bit so we can see the prices moving. I'm going to put here MNQ. There we go. Okay, so there we go. Okay, so now we have the movement in the market of the micro NASDAQ. So let's say that we want to go long or short, and some of our decisions would involve technical analysis, support, resistance, looking at multiple time frames, and so forth. But the question is, what makes you exit a trade? So let's look at that. So I prepare this. When do you need to exit your trade? So scenario 1 is when your technicals change. It means that your technical analysis that you use, whatever it is, support, resistance, moving averages, RSI, those typical kind of things have changed. Or if you use statistical analysis, quantitative analysis, basically whatever made you enter the trade is no longer there. So that's one concept of exiting a trade. The other part is when your loss gets hit, and basically this is how much you wanted to risk on that specific idea, and you no longer wish to be in the trade, so it hits your loss and you're out. That's pretty obvious. The third one is some sort of a surprise announcement. The surprise announcement could be the Fed, they're doing something with the interest rates. It could be a big political event. It could be some sort of a company or a large cap company that has a lot of influence, let's say on the NASDAQ. It's a big chunk of the NASDAQ, and it affects it volume wise and psychologically. So maybe that's that sort of surprise announcement. Maybe you want to exit the market. And also I want to introduce you to another idea is, what about time? How long is your trading idea valid in terms of time? So let's go back to the charts, and we'll discuss that. I'm going to bring it again, and there we go. All right. So basically, when you enter a trade, a lot of traders don't consider the concept of time. So here is my opinion. My opinion is that when you are looking at short-term trades, or when you're using short-term time frames, you should consider being in the trade relatively to the chart that made you initiate the trade. Let me give you an example. Okay, so let's say that, again, we have here a 15-minute chart, a 30-minute chart, and we decided to enter the trade somewhere here off a 5-minute chart. So if you're making a decision off a 5-minute chart, how long should you stay in the trade, right? And this is where you bring the concept of X. let me give you an example. You say, I want to be X time my chart frame. So for example, if it's 5 minutes, if you're making a decision of a 5-minute chart, you should be in the trade only 10 minutes to X or 3X or 4X. Now, obviously, I don't think you should exceed the 4X, because if you're trading off a 5-minute chart and you're going beyond 20 minutes, then it means, I mean, look, trading, you have to be flexible, right? So nothing that I say here, it has to be taken like it's a rule in stone. So I'm just talking in very general terms, and again, it's my opinion. You're entitled to your own opinion. But I will tell you that I don't believe that a trade that initiated off a 5-minute chart should last more than 20 minutes, right? So if any of your risk management parameters didn't hit, there was no surprise announcement, your stop didn't hit, and everything is normal in the market, it just fluctuates, most of the traders would just sit and wait for the target to hit or their stop loss to hit. But in reality, if 20 minutes have passed since you initiated the trade off a 5-minute chart and nothing happened, consider exiting the trade, because I believe a lot of things have changed since that, right? So obviously, if you're trading off 5-minute charts, you're not a fundamental trader. So what you want to do is basically say to yourself, okay, if this is my decision time frame, 5 minutes, then that's what I use for my trading. Consider, I should consider that there is a certain time that will pass that my theory is no longer valid for the trade, right? So now when you backtest your system, when you're doing a replay, you're actually looking at time. Let me take you to a little bit of an extreme opinion, okay? I mean, an extreme time frame. Let's say you're trading off 1-minute charts, and some people do. Some people trade off 1 minute, some people trade off 3-minute charts. So basically, if you're trading off a 1-minute chart, there's no point of being in the trade for 30 minutes. Clearly, if you made a decision on such a short time frame, you're dealing with technicals that are so precise that I don't believe, again, in my opinion, would be valid in 30 minutes, right? So maybe you shouldn't be in a trade more than 3 minutes or 4 minutes or 5 minutes. Maybe you should allow yourself 5 minutes with a 5-minute frame, with a 5-minute frame, with a 1-minute frame. But again, it's up to you, right? So you have to decide. So if you are trading off, let's say 30 minutes, right? Then obviously you're giving yourself more flexibility to be in the trade, because the technicals or whatever decision making you used, obviously, because you used a larger time frame, it will allow you to be in the trade longer. You should not choose time frames based on the amount of time that you should be in a trade. You should trade with whatever you feel comfortable and add the time variable into the mix. So something that I've done here in our trading platform, I've set up, I'm going to show you here, time alerts. So here is one for the micro NASDAQ, and you can set it up here in terms of seconds, and then you can set it up if your P&L is positive or negative. You can have 2 alerts if you wish, or 3 alerts. One you can set up for positive, for negative, or for any, but I'm just going to go for the sake of simplicity just with any, right? So basically this should alert me that within 30 seconds that I enter the trade, I need to exit or stay with the position. Obviously I chose 30 seconds just because, I don't want to make you sit here and wait for the alert to pop, but I want to show you how it works. So again, I set it for 30 seconds. All right, so let's say that I decided that the market fell. It shows consolidation, right? But I'm not sure that the market is actually going up. So what I'm going to do, I'm going to sell at the bid, just for the sake of simplicity, and I click yes. So now I'm in a trade, right? And the trade is now going, and I'm short. So again, I randomly just decided the market consolidated, and it should retouch you know, some sort of a bottom again, and now I'm in the trade, right? So actually, no, I'm still not in the trade. It actually, it's a limit order right now, waiting to get filled. Let me do something here, right? Trying to sell it at the bid. It's not filling. The market is very slow. Let's see if it gets hit soon. Sometimes you just need patience. Let me see this. All right. Okay. Market moved away from it a little bit, but let's see if it could trigger it. If it won't get filled in, let's say 1 minute, I'll just turn it into a market order, so you guys don't bring the popcorn and we don't have to watch a Netflix movie here how my order is getting filled. So, all right. Well, they didn't want to give it to me. They never want to give you good trades, right? All right. So, let me see. Okay. The market is dropping. Okay. And now my order is, you need so much patience with this. Yeah, right. All right, well, let me see if I could just, all right. Okay, so I brought it down and now I'm filled, and now I'm short again just for the sake of the illustration. In real life, you should sit and wait for your orders to get filled, right? So I thought the market is short, and now it's, let's see what it's doing. So it's fluctuating, and we're just gonna wait for the alert to come back to us, and I'm gonna show you how it looks like. Okay, so here's the alert. The alert says, would you like to flatten the position, cancel the order, or let the trade continue for your trade, right? So in this case, I just want to show you that, you know, let's assume that we're in a trade, we didn't hit the stop or anything like that, or nothing bad has happened in the market, and we just want to flatten the position. You could continue, of course, but again, you know, you could flatten it. You know, let's illustrate it again. You know, let's assume that now, you know, we're going to go to general settings. And by the way, on the P&L alerts, one of the things that we've done is also we set alerts. You can set alerts for the amounts of money that you make. So you can set alerts for profit or loss target, right? So you can have a positive one, or you can have a negative one, and you can have two of them if you want. Again, you can click here and edit again. You can add here M&Q, right? So, and you're gonna open it, and you're gonna put the front month here. So that's easy. But again, I just want to focus on, again, the time alert, right? So again, here's the micro, here's 30 seconds, and I'm going to, this is where you disable it, right? And I'm going to enable it again, and I'm going to just apply changes, so that should be good. And this time I'm going to, the market didn't drop, so I'm going to buy it, right? Okay, so I'm buying at the ask. Let's see. Okay, they filled me right away. And again, I'm going to wait. You know, you should do sorry, what I meant to say is that you should do a time frame that really fits your time frame. So again, I made it 30 seconds because it's just the easiest for illustrating this video, but you can put, you know, 300 seconds. So let's say you want to wait 5 minutes, and you're trading off and you're trading off, let's say a 1 minute chart, right? So you can trade here 5 minutes. So in 5 minutes, you have 300 seconds, right? So you can put 300 seconds and apply it. All right, I'm not going to do it right now, but again, it's asking me, hey, would you like to flatten the position, cancel the order for the trade, continue? So again, you know, typically I'm a big fan of risk management, which I think is really the byproduct of profitable trading. I don't think people should think of when they trade as, you know, how much money they should make, because that is a factor you don't know. But risk management is something that you control in terms of tools such as the size of your trades that you do, the margin that you use, and so forth. So this is just another tool to add to your risk management to try and, how should I say that, cope with decisions when the decision was not the greatest, right? And you will make a lot of decisions in day trading that are not the greatest, not because your decision making was necessarily bad, because sometimes the markets are just not playing along with your method. That happens too. Volatility changes, or volatility changes up or down, the velocity of the market, you know, trends and so forth. So I hope this thing will help you. Okay, so now obviously I've been focusing here for too long, and I lost now $8 because of myself. So I'm going to flatten the position, and now I'm out. So I hope this video helps you. Focus again on risk management. Optimus Flow is a great tool for trading, and I advocate, you know, to use it if you haven't decided on the trading platform yet. I wish you a good week, and that's it for now until the next video. And stay safe and trade safely. Thank you. Bye.